I'm refrained from talking today. I can't speak. I feel choked up. I don't even know what to say. The market has fallen. Feels like the crash is falling on my head sometimes, but I really don't know. But I want to share my 5 key reasons why the market's on a sell-off, and hopefully this will help us guide through the journey. Welcome back to Family Investment. I will start speaking now, despite the fact that I feel very choked that I cannot say a single thing. But again, there are 5 key risks that's on the table that will not go away until we get a progression forward. Once these 5 risks go away, then we've got a clear road to run for a possibly recovery. Unless these 5 key reasons disappear, we're where we are today. Okay, let's start off with the main number 1 reason why the sell-off was imminent. Not because about the Feds, but the other countries in the world where the UK and the EU raised the interest rates and they've declared technical recession in the next 6 to 12 months. And then time it to a point where it's actually end of the year, where the winter months are coming, where we need more energy bills, to a point where folks like us, me, my neighbors, cannot afford food or any other energy bills because the rates are going up so high, expenditure are going up so high, inflation is going up so high, it's going to be finding very difficult to afford anything. And that is called a technical recession, and it is scary because we don't know how long it will last. And that might bring everything, the whole global system down, and it's something we need to think about. Point number 2, it's Chinese logistics are still stuck. COVID zero policy in Beijing and Shanghai, it's really serious. The PMI data from 49 expectation dropped to 41, and they're at similar to what happened 2 years ago. Guess what? March 2020. That is when the COVID happened, when factories are shut, and guess what? We're going to version 2.0. Goes to show that the whole world needs China to get things going. That's how the global growth pumped through in 2007 all the way to 2020. We needed China for growth. We got the great bull run. China was partly responsible for that great bull run. And now China gets turned off, everything goes on a halt. So until that goes away, until things starts moving forward again, we're not going to see any progression of a global growth. And point number 3, Ukraine and Russia war. The media may not be sharing much about the progress going forward, but it is a Cold War, and this Cold War lasts for many years. The last few wars we've seen in the Middle East, the Taliban wars, those wars last for decades. I hope this doesn't last for so long. I hope it goes away, but there's nothing we can do to control it, and this is here to stay, and it impacts the whole EU and UK through inflation after when it squeezes our gas down. Interest rate rise will kill our mortgage and everything else we can afford. Point number 4 that we need to speak about, it's slow growth. Okay, slow growth leads to stagflation. What is stagflation? Stagflation is when unemployment goes up, inflation goes up, caused by slow growth. When companies starts going bankrupt, smaller companies starts going diminishing, defaulting, go away, people gets laid off, and people cannot afford things. Inflation goes even higher because there's shortage of things that we need, like food, fuel, energy, gas prices, and homes. Sometimes I do think about, if we never got COVID in 2020, will we get slow growth? Potentially yes, because there was a huge sell-off back in 2019 because of interest rate hikes, and there was concern about tech stocks going to slow growth. Tech stocks like Shopify, Twilio, PayPal, before COVID hit, was already overvaluated. COVID came and pumped them up even higher. COVID gave them a second life, and now COVID's away. May promote companies defaulting, people losing jobs, and inflation going up. It's called stagflation via slow growth. It's something that's really scary. It's something that's causing the Federal Reserve in the US to lose sleep overnight. This risk is starting to surface on the table, and I am the most concerned about point number 5. Liquidity crash. That's the super end game. Liquidity crash, where there's not enough money on the table. Everybody is selling assets, selling stocks, selling cryptos, selling house, selling land, selling factories to get into dollars. That is extreme. That has happened in my lifetime in 99, 98 during the Asian tiger finance crash. Not seen it anywhere else, but that was bad. It lasted for decades and people are still affected today. So liquidity crash is concerning because if you watch the DXY chart, the strength dollar is getting really strong. It's in fact stronger than back during COVID, stronger than back into financial crisis, as strong as the tiger failure in Asia in 99. And we're not far from the dot-com bubble boom where everybody was selling up and holding dollars despite the high rising inflation. So people rather get hit by inflation than losing their assets valuation. I hope I'm wrong. I hope this doesn't happen. I hope we don't have to force sell a house, crypto, stocks, my guitar for a few measly dollars. I hope that doesn't happen. Something that I am watching closely, something that I've already indicated a month ago on my Discord. But again, I'm not a macroeconomist expert. I'm just a guy who's experienced many financial crashes. It's really unfair for our generation, really unfair for the generation for my kids. But this is me on the 5 key facts which I'm monitoring closely. Sorry for the bearish cycle despite that I promote positive investing. Something that we have to think about, something we have to consider, because the news will only paint a picture, but we have to look around it to look at the 3D perspective. Thank you very much. My name is Dr. ALEXKOH and hope to see you soon.
I hope you enjoyed that video. Check out our website link below. More videos up here.
Bye.
Bye.